Today I'm going to talk about why you should refinance your house right now and the top 3 reasons why you need to go ahead and look at refinancing your mortgage. My name is Nick Good. I'm your Dallas-Fort Worth real estate agent. And if this is your first time watching one of our videos, please go ahead, hit that subscribe button down below, as well as that notification bell. It will make you aware of when we release new videos, which is typically about every week. And so today I'm going to be joined with Micheal DeBacker, AKA Mortgage Mike. You may have seen him on one of our previous videos, and he's going to talk about why now is that perfect storm to refinancing your home. What is a refinance, as well as the top 3 reasons why you want to refinance your current mortgage. And it will look a little bit different. This was, we're splicing in a Facebook Live interview that we did. So please go ahead, watch that video, like it, make a comment, and if you have any questions for Micheal, please go ahead and leave it down below. We're gonna get started right now. All right, good morning everyone. Hope you had a great weekend. I am joined here this morning, not with Elizabeth, but
I'm way prettier.
Way prettier.
Way prettier.
But with Micheal DeBacker with USA Mortgage, aka Mortgage Mike. And we want to talk about, and this is something that I'm personally looking into right now, so this is why it's a great time to have you on, is to talk about why now is the perfect time to refinance a home or your mortgage, right? And you just told me that there's really 3 reasons, why to refinance or why you should look at refinancing. And a lot of people don't even know what a true refinance is.
Yeah.
So,
yeah, right now, if you're on social media and you're friends with another loan officer, you're getting a lot of videos and a lot of memes, texts about why it's the right time to refinance. But I'm finding a lot of my clients have no idea truly what a refinance is or what the benefit could be. They can assume, hey, lower payment, and that's great. That is absolutely one of the main options. But let's start with this. I mean, interest rates right now, they're beyond 3-year lows. It's only a few times in history we've ever been this low in terms of interest rates. So that's why you're starting to see these massive amounts of videos and loan officers preaching that it is the right time, and they are correct. But I think it's important to understand where you can benefit from a refinance. There's really 3 main things. The simplest, most common is what we call a rate and term refinance, which is simply you are going to try to lower your interest rate to lower your payment. That's one way to do it. You can also stretch out your term if you need to lower that payment as well.
What do you mean? What do you mean by that?
I'm sorry. So let's say you started with a 30-year mortgage, you're 5 years in, so now you're at 25 years left on your mortgage, but you've also paid down your balance. Let's say you paid it down hypothetically $20,000.
Yep.
You can stretch your mortgage back out to 30 years as well to now take that lower balance, lower than what you started with, and stretch that out over 30 years. So that will also lower your payment. Again, there's always a place and time for every scenario that we do. It's not one size fits all, and that's what we'll look at. But rate and term refinance and stretching out your mortgage are a great way to lower the payment. Okay. That's one goal. Another one would be to take out equity to pay off debt or do renovations in the house. Now, in this kind of market, what's great about that scenario is not only would you be able to take out equity, assuming we meet the criteria for that, there are certain restrictions that we'll talk to you about when we go through that process, but then also you can potentially still get the lower interest rate as well. So that's an added bonus for you. Now, I did the 3rd reason, and I mentioned rate and term earlier. I talked about going backwards in term, but what a lot of people do with these lower interest rates is because they can get 0.5% lower, sometimes 0.75% lower, it opens up the door for you to take that original 30-year mortgage you did and reduce the time down to say 20, 15, and sometimes even a 10-year mortgage. So
you're taking the new principal balance, the new loan amount, right?
Yep.
And so you may be able to keep somewhat of a similar payment if you were to do a 15 or 20-year term.
Yeah. So actually, I did this on my first house. It was about 3 years ago. I refinanced my mortgage from a 30 to a 15. I'll be honest, I don't recall how much I lowered my rate. It might have been 0.5%, but the appreciation in my house, just based on the market, I was able to drop off my private mortgage insurance. So when I went down from a 30 to a 15, I only increased $180 in my payment, but I saved tens of thousands of dollars in interest over the life of the loan. I mean, tens of thousands.
Right.
It was significant. My payment only went up $180.
Really? Really?
Yes.
And so you mentioned the first one is really that rate and term.
Yep.
Right. The second one is more of a cash. Is that a cash out? The
Yes,
takeout
cash
equity?
out refinance.
So cash out refinance. What is that third?
That would be the reduction in term. So
Reduction
it's
in
still
term.
considered, it's classified as a rate and term refinance if we're being technical, but it would be a reduction in term if you were to go to a loan officer and ask about that scenario.
Gotcha.
So, what's really interesting is a lot of my clients are saying, well, I just bought a house last year. And we know personally that we have a client together that bought a house in May of last year. And I just saved them $60,000 on a 30-year refinance. So I took them back to their original 30-year and saved them $60,000, and they've had the home for less than 1 year.
Wow.
So don't let the time that you bought a house fool you. Their rates are seriously that low that there's an opportunity right now for many people that were sitting at a 4.5, 4.625, and sometimes even lower, where we can do a lot of work for you and really put you in a much better financial position than you're currently in. It's really phenomenal right now.
Absolutely. So what about the refinance costs?
Sure.
Right. What do you typically see in that?
Yeah, so you're going to have a lot of the same standard costs. A lot of times when you see advertisements, you're going to hear no cost refinance. Okay, that's fine. A lot of times what they're doing to offset any closing costs you have on a mortgage is just increase the offered interest rate. Some people also tell you no cost, and what they're really saying is no cost out of pocket. You can, if you have equity in the house, you can actually roll in closing costs. So those are things that we can look at. And again, it's not one size fits all. We will learn that, but as a foundation for closing costs, you do have things like potentially an appraisal. We may have to appraise the house again. Sometimes we don't. There's going to be title fees again. Again, there's a reduction there because you may have recently purchased a house, so you get some credits back towards your title policy. So there are standard closing costs that we go through. But again, we have the option to roll those in if the equity exists.
And what are you seeing from an appraisal? Are a lot of these, do you have to have a new appraisal done on them, or are there times that you don't have to, like, you can just get approved with no appraisal needed?
Yes, both. So it depends on the type of loan that we're doing. A cash out refinance, we're going to need an appraisal.
Okay.
An FHA loan, we're going to need an appraisal. Conventional loans, where we're just looking at doing a rate and term refinance, it comes to, we won't know immediately in advance as we're talking about the different scenarios. What'll happen is once you fill out an application and we start to process that application and we send you through our underwriting process up front, basically the algorithms within its Fannie Mae's underwriting system, it will read the market analysis. It will understand what the values are based on the address that we put into the file, and it will tell us if we need an appraisal at that point. I will say right now it's about 50-50 on the ones that we do or don't need appraisals on when it comes to that scenario.
And then with us in the new year, are you seeing people needing to wait until they do their 2019 tax returns, or are you able to get them refinanced right now and take their 2017 and 18?
Yeah. So and just for anyone watching, really we would only need tax returns generally for self-employed people, or if you had maybe rental income.
Perfect.
This is not our standard W-2 salary employees. But to answer your question, right now we would need 2017. We would definitely need 2018. I may only need 18. If not, then I would need 17 and 18. And then we'll do a profit and loss statement to cover 2019 in year to date. It's not an audited profit and loss. You don't have to go to your CPA or financial advisor to get it done. It's really easy, but that's how we would bridge that gap.
And I know one of our clients had asked the question, what about refinancing investment properties?
Sure. Yeah, it's really no different. You can do all the same type of options: cash out, rate and term, reduce the term, increase the term. All of those are the exact same.
Perfect. So what would be the best way for someone to reach out to you? Is it better just to call you, send you an email, send you a text, or?
Call or text, excuse me. My number, my cell, direct cell is 214-718-2248. We'll put in the comments as well. Absolutely reach out to me. There's no cost, no obligation, just to have the conversation. We'll go through, we'll talk about what goals you would like to accomplish. I'll let you know what my opinions of those are, what the options are. We can take a look and see if there's a way to help you out. I do want to add some bonuses as well to the refinance side of things. Yep. So whenever somebody refinances, we can close a loan probably 3 weeks, 4 weeks, depending again what your goals are. So let's assume if we start a refinance today, We close you in the month of February. You will not have to make a mortgage payment March 1st. You'll skip that mortgage payment. So you always skip a payment after closing. Your first payment would be due April 1st.
Right.
So that's an added bonus on the refinance. You get to pocket that money. Now, also, too, if you do have an escrow account that we're having to collect for at closing. So if you currently pay taxes and insurance in your mortgage payment today, you have that money goes towards the escrow account. It doesn't go to immediately pay taxes and insurance. So that account builds up and up and up. So you would have a balance in there right now. Well, when we do the refinance, we have to start an escrow account as if it was brand new, as if we never had any of those funds. So because we're starting the brand new escrow account, we'll collect enough at closing to make sure it's on pace to pay those bills when they come due. And that means that usually 3 to 4 weeks after you close on the refinance, what's in your current escrow account, $2,000, $3,000, that money comes back to you, and that's your money to do whatever you want with. So
you can save a payment.
Yep.
Right. And right now we're shooting this video in February, and more than likely you're going to get your tax return money in March and April. So there's that opportunity now to kind of double up and have some cash in the bank. So, it's that perfect storm when it comes to now with refinancing. I know we're personally looking at refinancing to drop almost a point, 1% in interest rate, so that I can then continue throwing more of my mortgage payment towards the equity. So it just gets down paid a lot faster.
And that's a great tool as well. When someone can save $200 a month on a payment, for instance, even if I take you back to a 30-year, we can reapply that $200 each month, and you will pay it off faster than the current amount of time you have remaining, and save significant interest that way.
And you've got a calculator that can show all that.
Oh,
right?
certainly. Yeah. We'll go through those detailed options, and it'll be all in front of you.
And what's your website?
It's www.mortgagemike, mortgage just common spelling, Mike short for Michael, MIKE.US as in United States.
Perfect. All right, Michael. Well, I appreciate you coming in today.
Sure.
We'll drop your info in the comments, as well as if you're watching this on YouTube. Everything will be there in the description. And then join us next week as we talk more about buying and selling real estate.